Joining me now is the author of that note, Peter Berezin, Chief Global Strategist at BCA Research. Peter, is it too early, perhaps, to say that Gen AI isn't having that much of an impact, or do the numbers tell us the truth here?
Well, you don't see that in the aggregate productivity data yet. If you look at output per hour worked, it has grown over the last few years, but it's basically grown as fast as the Congressional Budget Office projected 5 years ago. So we haven't really deviated much from the underlying trend that we were at prior to the launch of ChatGPT.
So if we were to look back at things like PCs, at the World Wide Web when it was first getting adopted, would we have seen a faster adoption curve, you think, than we're seeing for Gen AI now?
Well, Robert Solow very famously said in 1987 that you can see the computer age everywhere, but in the productivity statistics. What he meant by that was that computers were being widely disseminated, and yet the productivity numbers remained fairly ho-hum. Now, ultimately, productivity growth did rise, but it only started to rise around in the mid-1990s. And so the same thing could happen with AI. It could just take a while longer for AI to have that broad-based positive impact on productivity. And unfortunately, investors may not be patient enough to wait that long until those productivity numbers improve and the profits from that productivity ultimately manifest itself.
There are already rumblings, though, about AI having an impact on recent college graduates trying to find employment and the types of new hires that companies are and aren't making. It seems like existing employees perhaps sticking in place, learning to use this stuff, not as many new hires happening. Is that dynamic showing up at all in this data, or no?
I mean, you're seeing some productivity gains in some sectors, but again, it hasn't been broad-based. Now, I am optimistic that productivity growth will eventually increase due to AI. But again, it might take a while. And for investors, it's not enough for productivity to rise. You also need the profits to increase. And what we saw during the dot-com period is that productivity ultimately did rise around 1995. But it wasn't until 2005 that the profits from the internet finally appeared. That's a long time for investors to wait. We're going to see that sort of a delay between the productivity and the profits.
How should investors think about that, though? I mean, NVIDIA investors are certainly seeing profits, but I mean, a lot of other companies are having to pay to make those profits happen. How does the whole enterprise of AI get proven to drive profits kind of across industries versus just to individual companies?
Well, it may not. I think that's the risk for investors. The thing about companies such as Meta or Microsoft is that they benefit from network effects. You know, people use Office because others use Office. People use Instagram because others use Instagram. With AI, that's not the same. I don't interact with other users when I use ChatGPT. I interact with the AI itself. So you don't have that network effect, nor do you have the same economies of scale. With software, you spend a lot of money creating a great piece of software, and then replicating that software is next to nothing. With AI, it's different. With AI, you need the data centers. You need the NVIDIA chips. In some sense, AI looks a lot like airlines, where you have a really important industry, indispensable for economic growth, and yet the product is kind of commoditized. With AI, you know, the same neural net transformer architectures. These programs are very, very similar. You have high capex requirements. They just never make a lot of money. That's the risk for AI investors.